W&S Partners, a distinguished accounting firm, embarked on a new endeavor in 2015. They accepted the responsibility of auditing W&S Partners, a rapidly expanding online retailer. This audit presented unique challenges due to W&S Partners' reliance on technology. W&S Partners needed to delve deep into the company's systems. They aimed to ensure the accuracy of W&S Partners' financial statements. The audit team understood the critical role of technology. They planned to utilize advanced auditing techniques. The team was eager to contribute to W&S Partners' success. At the heart of W&S Partners' operations lay Swift, a sophisticated software system. Swift managed the company's vast inventory. It tracked every item from warehouse entry to customer shipment, ensuring smooth and efficient flow of goods. Swift was the backbone of W&S Partners' fulfillment process. Its capabilities extended beyond simple tracking. Linked to the sales order process, Swift automatically verified inventory levels, allocating items to orders, ensuring availability. This minimized errors and delays, boosting customer satisfaction. W&S Partners' sales order process was a carefully orchestrated dance between technology and human intervention. It all began with a customer browsing the company's website. Once a customer selected an item, it was placed in their virtual shopping cart. The customer then proceeded to the checkout, where they provided shipping and payment information. Before an order could be finalized, it underwent a series of automated checks. Swift verified the availability of the requested items. The system then performed a credit check on the customer, ensuring their ability to pay for the purchase. Only after these checks were successfully completed did the order transform into a sales order, ready for fulfillment. This multi-layered approach was designed to minimize errors and mitigate risks. By automating key steps, W&S Partners reduced the potential for human error. The system's ability to perform real-time checks ensured that orders were processed efficiently and accurately. This streamlined process contributed to W&S Partners' reputation for excellent customer service. The warehouse was a hive of activity, where orders transformed from digital entries into tangible packages. As soon as a sales order was confirmed, it was transmitted to the warehouse. Pickers, equipped with handheld scanners, sprang into action. They navigated the aisles, retrieving the designated items for each order. The scanners ensured accuracy by matching items to orders in real time. Once picked, the items were transported to packing stations. Here, they were carefully inspected for quality, securely packaged, and labeled for shipping. The warehouse employed a sophisticated system of conveyor belts, chutes, and sorting mechanisms to expedite the process. Efficiency was paramount, with a constant focus on minimizing the time between order placement and shipment. W&S Partners' commitment to efficiency extended beyond technology. The warehouse layout was strategically designed to optimize the flow of goods. Picking routes were continuously analyzed and refined to minimize travel time. The company even employed data analytics to anticipate demand and adjust inventory levels accordingly, ensuring that popular items were readily available.
Section 5. The money trail billing and accounts receivable.
Once an order was shipped, the billing process kicked in. Swift generated invoices for each completed order.
These invoices were automatically sent to customers via email.
The system also recorded the sales in the company's accounting software, ensuring that revenue was recognized in the correct period.
The accounts receivable clerk played a crucial role in managing the inflow of payments.
They monitored incoming funds, ensuring that payments matched invoices. The AR clerk investigated any discrepancies, such as short payments or late payments.
They also generated aging reports to track outstanding invoices and identify potential collection issues.
The AR clerk's responsibilities extended beyond simply processing payments.
They were responsible for maintaining accurate customer records, including contact information and credit limits.
They also played a role in resolving customer disputes related to billing or payments. The efficient and effective management of accounts receivable was essential for W&S Partners' financial health. Section 6. Cracks in the system. Identifying control weaknesses. While W&S Partners' reliance on technology brought numerous advantages, it also introduced potential vulnerabilities. The audit team, with their keen eye for detail, identified several control weaknesses that could expose the company to risks such as theft, fraud, and inaccuracies in financial reporting. One area of concern was the lack of segregation of duties in certain processes. For instance, the same employee was responsible for both receiving inventory and updating inventory records in Swift. This lack of separation of duties created an opportunity for an employee to potentially steal inventory and cover their tracks by manipulating the records. Another weakness was the reliance on a single system, Swift, for multiple critical functions. While integration offered efficiency, it also meant that a system failure or security breach could disrupt multiple aspects of the business. The audit team recognized the need for contingency plans and backup systems to mitigate this risk. Section 7. Strengthening the fortress. Recommendations for improvement. To address the identified control weaknesses, W&S Partners proposed a series of practical and effective recommendations. These recommendations were aimed at strengthening W&S Partners' internal controls and mitigating the risk of errors, fraud, and other irregularities. One key recommendation was to implement a more robust system of segregation of duties. This involved assigning different employees to handle different stages of critical processes. For example, one employee would be responsible for receiving inventory, while another would be responsible for updating inventory records. This separation of duties would make it more difficult for an individual to commit fraud or conceal errors. The audit team also recommended enhancing W&S Partners' IT security measures. This included strengthening password policies, implementing multi-factor authentication, and regularly backing up critical data. These measures would help protect W&S Partners' systems from unauthorized access, data breaches, and other cyber threats. Section 8. The crucial role of internal controls. The audit of W&S Partners highlighted the paramount importance of robust internal controls in today's business environment. Internal controls are the policies and procedures implemented by a company to safeguard its assets, ensure the accuracy and reliability of its financial reporting, and promote operational efficiency. Effective internal controls act as a system of checks and balances, reducing the risk of errors, fraud, and other irregularities. They provide reasonable assurance that a company's operations are conducted ethically, its assets are protected, and its financial statements are accurate. In essence, internal controls are the foundation upon which trust and transparency are built. For companies like W&S Partners, which operate in a technology-driven environment, strong internal controls are even more critical. The reliance on complex systems and vast amounts of data creates new opportunities for errors and fraud. Robust internal controls, coupled with regular audits, are essential for mitigating these risks and maintaining the integrity of a company's operations. Section 9. Conclusion: a foundation of trust and transparency. The 2015 audit of W&S Partners by W&S Partners highlighted the importance of advanced auditing techniques, robust internal controls, and the crucial role of auditors in financial reporting. By embracing technology, W&S Partners effectively assessed W&S Partners' operations, identified risks, and provided recommendations. The audit reinforced collaboration, transparency, and continuous improvement. In a complex world, the partnership between businesses and auditors is essential for trust.